Hello everyone, Wethu here. Today I'm going to show you how to manually trade with Olymp Matix. While robots are great, sometimes it's fun to take matters into your own hands and test your strategies. By the way, if you need any personal help or guidance, feel free to message me on Telegram. The link is in the description below. Alright guys, so this is the Olymp Matix trading platform. You can just check the link in the description of the video to create yourself an account, and this is what you're gonna see. So let me get you started on how to trade manually. There's the robot side of Olymp Matix, and also there's the manual side of Olymp Matix. So the manual side is going to be on the right here, and then on the robot is just going to be on the left. But today we're just going to be focusing on the manual side. So first of all, how do you select an asset to trade, right, when we're using manual trading? So what you do here, you go here, there's option right there, you're gonna click and it's gonna like show you a drop down of different trading assets you can choose from. As you can see right there, there's currencies, there's indices, and yeah, there's just everything, man. There's also Bitcoin and stocks as well. You find them right here. And then what I usually do to grade them, I usually look at this percentage, looking at their momentum, right? Because you also have to look at how big is the momentum. I usually like trading with the ones with high percentage, right? And then going down, these ones have a low momentum. You can also even see the price action is not quite nice, but then you just have to like do test multiple of them and see which one you feel like moves the best, right? But then yeah, that's just that. And then you can also, when you are manually trading, also do your technical analysis. Just look at how the price action is ranging. Are the candlesticks giving you huge momentum, like let's just say USD/JPY? Yes, it is. And then the time frames as well, that also going to be one important factor to use, right? When you are looking at the trade manually, you can just scroll here. You see we have from 5 seconds to the daily time frame. But then because we're using Olymp Matix, most of the time we're just going to be using the 1 minute, 5 minutes, or 15 minutes to 30 minutes at most, right? And as you can see, because this one is 89%, this is high momentum here. You can see how beautiful this candlestick is moving. So these are the types of market conditions I recommend you guys to look and be trading, right? Then also just look at the market trend, right? You can also see here that the market is at the resistance. We did touch here, and then also here there's an argumentative touch, and then also touched here. So there's a high chance the market can also go down. Look at the market momentum, look at the market trends, and yeah, man. And then now, because you're going to be using this platform, I recommend you also use these technical indicators, because they're the ones that are going to be giving you guys clear signals, right, as we're trading lower time frames. And I've been explaining the strategies on how to use these different indicators, right? You can test them all and then find out which one can be the best for you. But then this is where you actually find your indicators, and then you can just click them, and once you click that, it is gonna show here. And then if you know, with the MACD, I usually wait for the blue line to cross this line, and then I start taking my trade, the orange line, and then I start taking my trade, and you can see why it's the all-time highs, why it's around the 0 mark. So yeah, that is good, and you can then take your trade. So here, what you do, right, when you are buying, it's gonna be up, right? You click this one, and then your trade is gonna be selected, or click down and then to sell, right? And then the trade duration, you can just maneuver it here from 1 minute, 2 minutes, 3 minutes, depending, right, on which time frame is right for you, right? But then I just, maybe let's say start with 2 minutes, and then you can then put your initial amount to trade right there, and then you can click down. Let me now choose the best indicator, and as you can see, you can also have multiple indicators on the same chart, right? You can just have, as you can see right there, now I have 3, right, depending on how you like trading. And then you just gonna choose your best, right? But then The one that I usually like trading using the 1 minute duration is actually the stochastic, because you see this one usually shows like what the candles are gonna do immediately, right? Because with the MACD it usually takes a long time, but here it's like like immediately it comes here. Most of the time you're gonna get a good move, but then sometimes it's gonna correct. That is like part of trading as well. Here there was a big correction, but then it's not always gonna be like that, right? And then we did our thing, man, and then it started to go. But then at this current moment in time, I'm gonna look for a sell position once the market confirms. Now we're going to be getting ready to take our first trade. So guys, when you are trading manually, you should make sure you choose your like correct risk amount and not go very high from your risk capital, or very low. But then low is usually maybe the best option, but then you just have to be in the middle, like choose risk amounts that is going to be fair for you, right? With me right here, I'm just gonna be like testing with like $10. Not sure if let me just go to like risk on my real account, and then I'm just gonna be going for $5 per single trade, and then I'm going to like wait for the proper market conditions to come, and then I take a right trade. And then here with your stop loss, it's like you just risking that money and it's done. That's gonna be your stop loss, right? If you risk 5, if you lose, you're gonna lose $5, and then if you win, you're gonna win $5. That's how the take profit and stop loss just works. So you just need to be choosing the correct amount you are willing to risk, and then you're gonna be good. So right now I'm just going to be using the stochastic, because this is the one that I usually like than the others, because I usually get more frequent trades when I'm trading using the stochastic indicator, you know what I'm saying? So with this one, I'm either going to wait for a continuation to the downside, or I wait for the market to come in and then reverse on me, and then I take a trade. Or maybe once it gets here to 100, and then I start looking for maybe, let's say 90, 100. So I'm gonna start looking for proper trading conditions. But then at the moment the market is just trending to the downside, you know what I'm saying? And it's from here we might have entered a bit late, right? If we just entered when the blue line crossed the orange line, that would be good, but then the market is still trending down. So here, if you can look properly, you can enter multiple times, right? When it starts to go under, you enter, and then as well here you enter, and here there's also 3 entries in one run, guys. There were 3 entries in one simple run, you know what I'm saying? So as I said, this one was a bit early, and those are the perks of trading manually. You know, sometimes you're just going to be a bit late, you know, because now you have to be hands-on, you have to be patient, you have to wait, you have to look at things technically. So now it depends on your brain, and sometimes your brain, you know, you may make little mistakes here and there, but it is what it is. Our mistakes don't judge us, we just learn from them, especially when we're trading manually. So right now, let's like give it a good start, right? So I'm going to be looking for a selling condition right now, because we haven't reached our 20%, you know. So once we reach our 20%, that is where I'm just going to be starting to look for like buying opportunities. But at the moment, I'm going to be sticking to the selling opportunities. So what I'm going to do right now, I'm going to wait for the blue line to cross the orange line, and then like to be below it, and then I start selling. And it's the same for the inverse. Alright guys, as you can see, I've just took multiple trades manually, because I just saw that the blue line has already crossed the orange line, and we're at the 80% mark. And if you want more information with the stochastic, just do watch my previous videos when I'm talking about these different kinds of indicators, and then you can choose the best one for you for trading manually, right? So I've just taken multiple trades. So this is called the barcode. So I just took multiple trades. Why? Because yeah, this to me is like a high probability trade, right? Because I've seen right the 20% mark, and yeah, which is reversing, and as you can see guys right there, the market is going down very well. You will see from the deals, right? I just took 3 trades, as you can see right there, 3 wins in a row. And yeah, I just saw a high quality trade, and then yeah, that's just like how I want to do it. Just approach it aggressively, right? This one was the first test trade, and then these are the trades that I now took, like waiting for a high quality trade. It can take some time, yes, waiting for these levels can take some time. I don't want to lie to you guys, but yeah, you need to be patient when trading manually, right? As for me, I've made close to $15 in just one single trade, risking $5, but barcoding when a high quality trade comes. So this trading this way is very easy. I don't wanna lie to you guys. Also easy. You just wait until it's oversold. Maybe let's say it's on 20 or even less. When it's less than 20, it's usually even better, you know. It is usually even better. But then yeah, from the 20 level, you know, you must buy now because the market is oversold. And then from the 80 level going up, you should sell because now the market is oversold, right? Overbought, sorry. So that is how the stochastic works. And the stochastic usually measures like small candlesticks and momentums, and with the stochastic I usually like trading duration of 1 minute, yeah, because you see there's a lot of entries that usually happen in a short period when you are using the stochastic, you know what I'm saying? So yeah, so here there was this entry, there's also this entry, and then this one would be a failed, and you see maybe you take 1 loss and then you take another loss, 2 losses here, and then the third time you just take 3 trades to recover everything until we go, you know what I'm saying? Similar to just like how the AI does it. But yeah, create a working system for yourself and you'll see wonders, I promise you. Yeah, let's continue. Let's wait for more opportunities, and then yeah, and we're now at the 20 level already, so I'm just gonna look for a buy. I don't want to lie to you guys, I'm looking for a buy. Okay guys, so right here yeah, the blue line is almost crossing the orange, and then I just took a buy, but then I think it was a bit too early because it wasn't like confirmed like that. But then that is not a problem, because on the second entry I'm gonna like enter 2 entries just to like recover for that mistake, right? So yeah, still there's no problem. But then you can see that okay, now we're at below the 20 level, and we're now trading at the, let's say, yeah, the 8. So that one was a loss. It's still fine, guys, still fine, right? These are the perks of trading manually, you know what I'm saying? You just need to make the decisions on your own. But then let's wait for it to confirm nicely, like clean confirmation, because I feel like I rushed that one. But then yeah, that's how the human mind is sometimes, you know. So let's wait a little bit. Let's not rush. It's almost there, it's crossing. But I need like a confirmed cross, because the other time when I entered it wasn't a confirmed cross. So that is why we were cooked. All right, so let's wait a bit. Okay guys, just took 2 buys now due to the fact that the blue line is now above the orange, and then yeah, just to recover for this one and then be up. So I took 2 manual buys, and let's see how it goes, man. Let's see how it goes. And it's looking good already. It's looking good already, man. It's looking good already. Took 2 buys, and then yeah, man, the market is pushing. Now you see, guys, the market was on below the 20 level, and then the blue was above the orange, and then you see what happened. Guys, come on. And here we did take one L, right, because I was a bit fast, but then it's still fine. With the second confirmation, you'll just have to enter twice, right, as you can see right there, just to recover for that one. Never miss with this one. You will never miss. So sorry, let's go to the deals. As you can see, guys, for yourself, 2 wins, 1 loss, 3 wins, 1 loss. So when did you actually start trading? Because this was a test. I started trading here, right? This is the history, right? When I started waiting for my confirmed entries. 1, 2, 3 wins, 1 loss, 1, 2, and 2 wins. So 5 wins and 1 loss. So guys, if you are looking to trade this way, also do watch the stochastic indicator video on the channel, and you'll educate yourself on how to trade with it. If you feel like, this one is much more simpler, but yeah, to me this one is much more simpler and straightforward, and I do get to have multiple entries when I'm using the stochastic other than maybe the rest, but all of them are the best. There's also the RSI, because you can also put the stochastic against with the RSI, right? And then you can see here when the market was here with the oversold condition of the RSI, at the oversold conditions of the RSI, you then have an opportunity to buy. And then you also see you have to wait. Maybe let's say it's oversold, the RSI is starting to go up, and then the blue line is now above the orange, and then now you have at least 2 confirmations. You get in, you know what I'm saying? You get in, and then now the RSI, maybe let's say it's on 80, 70. You do the same thing. You wait here. Is it below? You enter, and again and again and again it comes to overbought conditions, and then it's starting to sell. As you can see here, it trades below, you enter. Maybe if you lose, you enter again. Eventually it goes, and then you can then start working on how to trade the continuation trends, because they are still a thing. You can still trade continuation trending. As it's going down, it comes up, trades below, you sell again, and then as it comes down, trades below, you sell again. So yeah, simple as that, my guys, simple as that. So guys, with the session done, what are the emotional risks involved with manual trading? So as you seen from the session, there were lessons to be taken, but then if you didn't grab, sit through and watch this video. So guys, as you saw from the session, some of the positions we did get in a little bit early. That's because yes, we are trading manually and we are trading using the human brain. So most of the time, or sometimes, we will make some mistakes here and there. So those are some of the risks that are usually involved when you are trading manually. You're going to be hesitant, you're going to be rushing, right? Because you're having the urge that, yeah, I want to press that button. What if the trade leaves me out, like a fear of missing out. So those are some of the most emotional triggers that people get. Fear of missing out, right? That if maybe the signal, it hasn't been ready, but then still needs a bit of maybe a minute to settle, but then you just enter because you have a fear of missing the trade. So that is the most important emotional mistake people usually do when they manually trade, right? So guys, in order to alleviate emotional mistakes, it is very much important to control your emotions and stick to one strategy. What do I mean by that? You should make sure that you're not emotional when you're trading. You don't have FOMO. And how can you alleviate that? You can just read yourself books on trading psychology and watch videos on trading psychology, and try to keep your emotions in check, right? Make sure you are trading with money that you are willing to lose. You know what I'm saying? You're not like in the edge that this money, because that is where most of the time we usually make mistakes. And just test your strategy. That's another thing that I'm gonna let you guys with. Do take a strategy that you've tested and you trust that this one is consistent over a period of time, because these emotional mistakes usually come if you're not sure about what you're doing. So well, with me, you saw how I was trading, right? I was sure of the stochastic indicator that okay, if maybe I can take a loss, I'm gonna enter again with 2 entries, and then it's gonna recover the first loss, and then I'm gonna make profits with that. And looking at the levels, I know I'm looking for 20 or 80% level. I'm also looking at the blue line to cross the orange line. You see, things like that. So my strategy is defined. So even if I do get a loss, I'm not gonna be emotional like that, because my strategy, I know it, and I've tested it a couple of times, multiple times, and it has been consistent. So what you need to do is to be consistent with your rules, right? Consistent with your system, and do show up every day, right? Test your system, make tweaks here and there if they are needed, so that you can have yourself a proper system. And do also have routines when you're trading. Know your times when you're trading. Wake up very early, have yourself enough sleep. You know what I'm saying? So those are the things that I do apply on my trading as well. I have myself enough sleep. I have myself a proper morning routine whereby I'm gonna wake up in the morning, open the robot, scan the pairs, right? Look at the pairs that have very nice trends, trending environment, have very nice momentum in them, because also emotions can also be caused by lack of technical analysis, lack of technical information. You don't understand how the market is trending at that particular time. So you do also need that knowledge as well to be in your arsenal. And I also want to dive into the importance of risk management when you're trading. So when you're trading, guys, you should know that you need to risk a specific amounts from your trading capital. Do not risk everything, right? Risk maybe, let's say 1% to 10% per trade, depending on how big your capital is. You know what I'm saying? Don't go for the whole bag. Maybe you're risking now 20 to 50% of your trading capital. Even the 10 is a lot. Maybe let's say 5. You know what I'm saying? And then, right, make sure you are like risking accordingly. Let's say even your take profits, you know, maybe let's say you've taken a loss. Maybe on your second trade you're going to go for a 1:2. How can a 1:2 happen here? The first trade you take can be a loss, and then the second trade you can take can be a win. You risk 2 trades, so that one trade is gonna recover the previous loss, and then the second trade is gonna push you up. Even if you get 3 losses in a row, you can then on the other 4th trade you encounter 4 trades, right? 4 trades, and then you show that you can recover everything. So that is how I use my risk management, especially when I'm using Olymp Matix, because it's not going to be the same for all of the platforms, you know what I'm saying? But then this is the best way you can apply it here. But then if not, you can just stick to one risk amount. Maybe let's say you're just going to be risking yourself 1 trade, $5, and that's it. Even if you can get 3 losses, you're still going to continue with that $5 until you come back. You know what I'm saying? So that is very much important, and not risk everything. If you see now, no, you've lost enough, just leave, and then you come back the next day. So you just have to know your loss limits, guys. Maybe let's say you give yourself, if maybe it's too much, maybe you're risking $100 trading capital. Maybe let's say if you maybe lose $20 in that particular day, you just leave the market. You're gonna come back tomorrow. Trading conditions are not usually the same every day. Maybe today wasn't your day, but then tomorrow it's gonna be your day. The market is gonna be on your side. But now remember, when you are now losing $20 in your $100, and you're still continuing wishing to, no, I wanna make that money back. No, just relax. When that's done, you come back the next day. I assure you guys, trading conditions are not always the same. They can be bad today, but then tomorrow they can be amazing. They can be amazing today, but then tomorrow they can be bad. So you just need to know your loss limits and your take profiting limits to limit yourself when you're trading. So right now I want to dive into tips that are going to assist you in manual trading. So what I can say, guys, it's do stick with one strategy. As you guys saw today, I was sticking with the stochastic indicator for the whole session. So what did happen? We were able to be profitable, right, on one strategy, and same rules. And my rules are that maybe let's say if I take a trade, right, I lose that particular trade. So what I do is that once I've lost a trade on the second trade, because maybe let's say the entry hasn't been confirmed yet, I'm gonna enter again if I see a signal to let me enter again. But then I'm not gonna be entering one trade, I'm gonna be entering like 2 trades. Why is that? I want to recover the previous loss that has been made and then make profits with that. Even if I can maybe take the first trade and it loses, I take the second trade and then it loses. What does that mean? I have to take 2 trades to recover the 2 losses that have been taken, and then a third position to make that profit. So if I get 2 losses in a row, I'm gonna enter 3 positions now, right, to make sure to recover the previous 2 losses plus more profit. So what does that mean? My profit is going to be going steadily up, even if we are losing, right? Even if we have taken 4 losses in a row, all of the other positions that are going to be taken care of. With that way, it's for me, I've been profitable trading that manner. Because let's look at it this thing this way. You see, if you are like maybe let's say just open one trade, regardless of what happens, you can take 5 losses, and then the next 6 trade is going to be 1 position. What is going to happen is that you're just going to recover one of those 5 losses. But imagine now if maybe on the 6th trade you risk maybe let's say 7 positions, you're going to recover everything plus more profit. So you've recovered the whole of the losses, right? And then you've made more profit. But then that is usually reliable when you have a significant, like bigger trading buffer. Usually recommending, let's say $100 for me. That is what I recommend for myself. It's okay if I want to have a good trading buffer that is not going to give me a problem. It's going to be it's going to be $100, and then I can do that. Even if I can take 5 losses in a row, there is no problem. I can still come back with 6 trades, 6 positions, and then I come back. And yeah, but then that is how I just like to do my math when I'm trading manually. Another thing, do start with small trading capital, maybe let's say 50 to 100, right, for testing, and also your initial trade amount. At least start from $1, you know, test yourself, start to get used to the system, right, with those $1 until you are happy. Maybe per day you make yourself those $5 or maybe that's $10, and then you can then start to escalate, because it's very much important to be comfortable with the way you trade by using a small real trading capital, because you can start from the demo, and then as you're getting in gradually, put in your 50, put in those 100s, put in those 200s, and then you can grow steadily. So that is what I recommend. Another thing I just want to add on, but I did talk about, is that also, guys, do look at those trading conditions, right? Do analyze those pairs, look at them, look at the momentum with the pairs, look at the market trend. Is the market showing any signs of momentum? Because that is going to work on your side as well trading, because here we're working with momentum, right? We need the difference in the candlesticks in the 1 minute, right? Maybe let's say I've entered a buy, I need to see the candlestick at least move up to my direction, because if the market is in a correction, it's gonna be difficult for you to make money. Because let's say now there's no momentum, maybe the trade was almost on the buy, but maybe it retraced a little bit, now you've lost. So that is why I recommend trading instruments that do have momentum in them. And as I end, just guys, trade with an objective, don't trade with emotion. That's just going to be the one important part of this video. Just have an objective when you're trading and stop trading emotionally. When you've lost your daily loss, just get over it. You're gonna come back tomorrow, and if you hit your targets for today, that's good, man. Leave it, we're gonna come back tomorrow. So guys, do take these important points into account, and they're gonna change your trading to a milestone. So guys, if you found this video helpful, be sure to like, comment, share, subscribe for more trading tutorials. If you need personalized guidance, feel free to message me directly on Telegram. The link is in the description below. I'm always here to help guide you personally through your journey. With that said, guys, I'm gonna see you in my next video. Take care.